Have you ever noticed how a calm mind can really set the stage for a good night's sleep? That's the idea behind our new podcast, Good Sleep. Greg, our host from Optimal Relationships Daily, is here to help ease you into a peaceful night's rest with some positive affirmations. And these affirmations aren't just comforting. They can help ease anxiety and nurture positive thoughts, setting you up for true good sleep. So press play on Good Sleep tonight, because a good tomorrow starts with a good night's sleep. Just search for Good Sleep in your podcast app and be sure to pick the one from Optimal Living Daily. This is Optimal Finance Daily, episode 2477, Warren Buffett's Best Investing Tips by Robert Farrington of thecollegeinvestor.com. And I'm your host and personal finance enthusiast, Diana Merriam. Now let's get right to today's post and start optimizing your life. Warren Buffett's Best Investing Tips by Robert Farrington of thecollegeinvestor.com. Warren Buffett is one of the best investors in history and is widely regarded as the Oracle of Omaha. Buffett is a value investor at heart, but he also shares a lot of other insights during shareholder meetings and his annual letter to shareholders. As such, it's pretty easy to understand Warren Buffett's investing philosophy. Plus, since his holdings are so widely followed, you can check his portfolio anytime at the CNBC Berkshire Hathaway Portfolio Tracker. While over time he has thrown out a ton of different tidbits on investing, here are the top 5 investing tips Warren Buffett has given. Number 1, cash is king. Cash is a big deal to Warren Buffett, and he keeps a lot of it on hand at any given time. The reason? In Warren Buffett's words, he keeps a lot of cash on hand so we can both withstand unprecedented losses and quickly seize acquisition or investment opportunities. Also, in his 2011 letter to shareholders, Buffett reprinted a note from his grandfather from 1939. Quote, "I have known a great many people who at some time or another have suffered in various ways simply because they did not have ready cash. I hope it never happens to you." End quote. That is solid advice for personal finance. You always want to maintain an emergency fund for the unexpected, but you should also keep cash in your brokerage account ready to go so that you can buy things on the dip. For example, if you had piles of cash waiting to invest when the financial crisis hit, you could have bought low and sold high, reaping huge 50 to 100% profits on your investment. However, if you had everything tied up in investments, you would have just suffered large losses. Number 2, be fearful when others are greedy. One of Buffett's most famous phrases is be fearful when others are greedy and greedy when others are fearful. This great sentiment is very true of our stock market and investing system. The bottom line is that you should avoid the stocks that everyone else is buying, as they're probably overvalued. Instead, look for the stocks that few people are paying attention to, check their fundamentals, and invest if it makes sense. Number 3, dividends are your friend. Buffett loves dividends, as do most value investors. Dividends are a great perk to buying a company, as it usually shows that the company's finances are in good enough shape to support paying out its hard-earned money. Buffett likes companies that have a long history of paying dividends and even increasing them over time. A popular tracker of these types of stocks is the Dividend Aristocrats, which are companies that have increased their dividends over the last 25 years. Plus, Buffett recently announced that there's a good chance that the total amount of dividends paid by his position in Coca-Cola will soon surpass what he paid for the stock. That's a great return on investment. Number 4, always buy undervalued stocks. Buffett is a big-time value investor and always looks to buy undervalued stocks based on their intrinsic value. He calculates the intrinsic value by looking at the company's fundamentals, at a minimum of over the last 5 years, sometimes longer. He looks a lot at return on equity, operating margins, and having little or no debt. He compares the company to its peer group and likes to see if it's undervalued. A key part of this is also looking for companies that have some type of monopoly or special trait that will enable it to be successful in the future. This could be technology, even though Buffett avoids tech stocks that he doesn't understand, or even management. All of these factors can contribute to intrinsic value. And number 5, buy and hold. Finally, Buffett is a true buy and hold investor. He holds his positions for a long period of time and constantly reiterates this to his followers. In fact, he has said that he likes to buy and hold forever. And it's true, since he's owned many of his positions for over 20 years, which is eons in the investing world. However, he has also said that this doesn't mean hold a company if the fundamentals have changed. Buffett constantly looks at his portfolio, and if a company loses its edge or superiority, then he does sell or trim back his position. He also is a huge believer in patience. Basically, don't trade, invest. Find companies you like and wait for the right price. It's been said that Buffett has a list of hundreds of companies that he wants to invest in, but that he's waiting for the right price and opportunity. The last time he went on a buying spree was the Great Recession, when stock prices tanked. He was able to scoop up deals and get in on prices that made him get great returns in the following years. You just listened to the post titled Warren Buffett's Best Investing Tips by Robert Farrington of thecollegeinvestor.com.
Reboot your credit card with Apple Card. It gives you unlimited daily cash back that can earn 4.15% annual percentage yield when you open a savings account. A high-yield, low-effort way to grow your money with no fees. Apply for Apple Card now in the Wallet app on iPhone to start earning and growing your daily cash with savings today. Apple Card subject to credit approval. Savings is available to Apple Card owners, subject to eligibility. Savings accounts by Goldman Sachs Bank USA. Member FDIC. Terms apply.
Labor strikes, climate change, your beat-up office printer. What do they all have in common? Come on, it's all about the money. Economics is everywhere and everything fueling our lives, even where we least expect it. If you're a fan of Optimal Finance Daily and are curious to learn something new and exciting about economics every week, I recommend you listen to the Planet Money podcast from NPR. Planet Money is a different kind of world where the complex economy actually makes sense, where human stories supersede abstract theories. Listeners can learn, laugh, and be entertained. It's econ, down to earth, and Planet Money answers some of life's burning questions. Like, will AI take over our jobs? Why are Christmas trees so darn expensive? The Planet Money team lives to tell a good story in around 30 minutes. It's econ for the rest of us. Tune into Planet Money every week for entertaining stories and insights about how money shapes our world. Stories that can't be found anywhere else. Listen now to Planet Money from NPR, wherever you get your podcasts. Many of us think of Warren Buffett as the Michael Jordan of investing, and we can learn a ton from him. I personally really love what he has to say about index fund investing. In 1993, he said, quote, "By periodically investing in an index fund, the know-nothing investor can actually outperform most investment professionals. Paradoxically, when dumb money acknowledges its limitations, it ceases to be dumb," end quote. I wouldn't call myself know-nothing or dumb, but I'm certainly not an Ivy League trained investment analyst who spends all day reviewing reports and making predictions. And the data shows that I don't need to be in order to reach my financial goals through investing over time. A big reason why Buffett is a fan of index funds is that he recognizes how fees will kill performance over time. In 2014, he said, quote, "Huge institutional investors, viewed as a group, have long underperformed the unsophisticated index fund investor who simply sits tight for decades. A major reason has been fees. Many institutions pay substantial sums to consultants who in turn recommend high fee managers, and that's a fool's game," end quote. Buffett even noted that upon his death, the trustee of his wife's inheritance was instructed to put 90% of her money into a very low fee stock index fund and 10% into short-term government bonds. If that's what he's recommending for the person he loves most, that certainly says something for the rest of us. And that should do it for another edition of Optimal Finance Daily. I'll be back tomorrow as usual, so I'll see you there on the Wednesday show, where your optimal life awaits.